Good afternoon, everyone. Thanks for joining us today. We have an update with Mako Mining. And as always, this presentation will contain forward-looking statements. If you'd like to know more about those, you can check them out on the company's website in their presentation. And there will be a Q&A section. Actually, I think a lot of the presentation will be Q&A because it's an update. So feel free to input your questions in the Q&A box at the bottom, or you can email them to me. And for those of you that may not know the story, I recommend you look at some of the other Mako Mining webinars that we've done on the Adelaide Capital YouTube channel, because this one will be mostly an update on what's going on at site. With that out of the way, Akiba, thanks for joining us.
Great. Thanks, Deb. So for those that recall, we're always working on three things. We've now built a 500 ton per day mine in northern Nicaragua, which is the highest grade open pit mine on the planet, bar none. And I'll go over some of the data that's coming from the mine, really since we started to mine the high grade towards the end of last year. Now, all of this was to get a stepping stone for us to find additional resources from satellite projects to the south and even to a certain extent to the north of us, in order for us to be mining at twice this capacity in about 2 years' time. So at the very end of 2022, early 2023, we'll be mining this at 1,000 tons a day. So we built the plant with that in mind. So most of the infrastructure is already in place to handle 1,000 ton a day operation, and very little CapEx, very little civil works is needed for us to adjust that throughput in this time frame. In fact, we're kind of limited by finding additional resources rather than infrastructure. So that's why we've also commissioned about an $8.5 million exploration program this year, which will tally to about 50 or 55,000 meters of diamond drilling that will focus not only on some info work on the direct satellites from San Albino, but also to delineate a resource over at Las Conchitas to the south, and really for the first time ever, to start looking at some regional targets that we have on the project. So thirdly, and probably most importantly with our project, is that we do think that we're sitting on an orogenic gold mining camp over here. So San Albino as a resource is relatively small, and that's why we've designed the plant at 500 tons a day. With Las Conchitas, we'll be able to run that at 1,000 tons a day with reasonable longevity. But really, the game here is to find additional resources outside of the direct area between San Albino and Las Conchitas. And over the course of the next few weeks, we're actually going to be putting out some additional prospecting results from areas as far away as 20 kilometers from the mine. And I can say we did find additional gold. In fact, there's prospects and showings, grading spectacular grades really across the entirety of our property, which accounts for about 188 square kilometers, 23 kilometers of rapidly being tested strike at this point. So there's been a lot of basic exploration work that we've done on this property since we took control of this company back at the end of 2018. So a little bit about where we are right now. So I think since the last presentation, we took an additional $6.4 million working capital facility. That cash balance did not account for that. So right now, as of this morning, we have about $3 million of cash across the company's balance sheet right now. We have started to produce gold. We're actually sending out our first shipment. I'll go over some of the delays that we've experienced over the course of the last few weeks that are rapidly being resolved right now. But we'll send our first shipment of gold for sale sometime at the end of this week. With that working capital facility, which didn't include any equity warrants, we should have enough capital and then some to get this fully operational to commercial production sometime by the end of this month, at least to start commercial production. From an accounting purpose, it will take a while for us to run at that rate before we declare it. But we'll be running at close to 500 tons per day from the plant perspective. We'll be mining at close to 500 tons per day of ore extraction, with plenty of stockpile to be running at that level, such that we'll be able to formally declare commercial production in reasonably short order. So as of today, there's about 656 million shares outstanding on our balance sheet. And again, the mine is now completely done from the 500 ton per day plant perspective. Now, some of the things that we've been working on over at San Albino since our last update. So first of all, the mine. Now, we've publicly released 2.5 benches. We've mined a total of 4 benches right now, and we are pulling out in excess of a ½ ounce material, about 15.1 grams a ton in the diluted vein material coming from the open pit at the mine. The next bench and a half that we have mined when we put out will have higher grades than this. So to put that in perspective, the highest grade open pit, not including San Albino, is the Kizil mine from Polymetal out in Kazakhstan, an extremely high strip ratio mine. It's well into the 30s over there. They have open pit grades of about an 8.5 grams a ton. We've been mining to date since the end of last year in excess of a ½ ounce material, well in excess of 15-gram material. Our resource is, or at least the mine is positively reconciling to the resource itself, just like we said it would. So we took a very conservative approach on how we delineated our 9.56 grams measured and indicated open pit resource. And now that we're mining it with a lot of care and diligence to make sure that we're controlling dilution as much as possible, the actual grades coming out of the mine from that diluted vein material are exceeding expectations. I actually am exceedingly happy with how our mine has handled getting this operation up and running. Last month, from the diluted vein material and the historical dump material, which is economic, by the way, so that's stuff that we're going to be processing through the mill, we were taking out in excess of 350 tons a day of material. We have a substantial stockpile at a 500 ton per day processing plant. We'll have about 3.5 months of stockpile in front of us. So that gives us plenty of time for us to get to 500 tons per day over the course of the next couple months. And then we have that stockpile to bridge any gaps of production from then. And again, extremely high grades coming from this mine. And by the way, that 350 tons a day, I'll go over this when I give you the security camera update from the mine. We happen to be in an extremely skinny part of the mine. So this is where our vein, say the average width of the vein is somewhere around 1.25 to 1.3 meters. Now we'll take out some dilution on either side of it. We're in the part of the deposit right now where the average width of the vein is about 0.6 or 0.7 meters. Taking a step back, if we were going to be showing this asset to other technically oriented investors or mining companies, and we showed them that we had a 0.6, 0.7 meter wide vein that happens to be grading well into the 20 gram range over here, and we would tell people that we were going to be mining this open pit, we would have been met with disbelief. It said this is a very unconventional way of mining an open pit. But our approach to grade control, our approach to our excavator-driven mining is showing that we can actually mine our veins with less than 30 centimeter tolerances on either side. So when you're going to be mining undiluted veins that are going to be pushing 25, 30 grams a ton, we're actually able to control dilution such that we're taking out a fully diluted vein right now well in excess of a ½ ounce material. This is going to be 16, 17, 18 plus grams fully diluted. That will be the functional equivalent to the mill head grade when we're going to be putting the high grade through the plant. So you asked me this question a year and a half ago, what is the key risk of San Albino from a technical perspective? It has always been, can you go after high grade, narrow veins in a reasonable manner? And both in terms of the care and diligence that you take to pull out that resource and controlling dilution. And at the other end of the spectrum, can you actually do that at a reasonable throughput to get to 500 tons per day on 3 working faces? So at 2 working faces, on the skinniest part of the mine, we're pulling out, inclusive of historical dump material, about 350 tons a day. When we get into the thicker part of the resource, because the average width of the vein is about 1.25, 1.3. If we are mining right now at 0.6, 0.7, just arithmetically, that means there are going to be parts of this deposit that are going to be substantially wider than 1.25 and 1.3 meters. So we do have a zone called the Porcelana zone, which we're going to start extracting the good part of that sometime in the early summer. But the average width of that vein is in excess of 2 meters. So well in excess of 3 times the widths that we are extracting right now at similar grades to what we're extracting. And what this means from a throughput perspective is very simple. If you have a mining section that you're going to be taking out that has a 0.6, 0.7 meter wide vein, and you're able to get a couple of these sections at any given day, and you're able to get 350 tons per day out at that level, if the vein happens to be 3 times thicker within the same unit that you're going to be pulling out, by definition, your throughput will be 3 times larger. So when we're in Porcelana, if we can actually if we're mining now, and this is real data coming from the mine, if we're mining right now at 350 plus tons a day of ore, if we're in a zone that is 3 times as thick as what we're mining right now, we're going to have certain days that we're going to be pulling out in excess of 1,000 ton a day of ore material. We're not ready to process at that level. It will take some time for us to have sustainability at mining 1,000 tons a day. It really will require operating on more than just the 2 or 3 mining phases that we are right now. But it does bode very well in the future when we're going to be opening up additional deposits over here to be able to fill a mill at that level, which again, a year and a half ago, if you asked me this question, that would have been the key risk of this project. Not only to mine this well, but to mine this fast enough that we can actually fill the plant that we've now succeeded in building. And then on the exploration side, so this is the other thing that we've been working on, and it's going to become a much more important factor of Mako for this calendar year and subsequent years. So this is a chart that I really like because it shows the story of what Mako and its predecessor was about, right? So this was a mine, San Albino, back in the 1920s. There's a long history. It was taken over by Augusto Sandino in the initial Nicaraguan revolution, and it was basically put into a time capsule until the early part of this millennium. So after a series of owners, it was picked up by Mako's predecessor, Golden Rain, and the geology was reinterpreted. A resource was developed. They were actually very successful at raising capital in the open market to go and develop a resource in 2012. So you can see that light blue bar chart is the cumulative number of meters that they drilled to delineate a resource in 2012. As part of those financings that they raised to get that resource to where it was, they took on certain investors that had shall we say, a different approach to how to build a mining project. They were adamant about not spending any capital for any reason. So no capital to build the mine effectively, at least at a reasonable throughput. They really wanted to get this done almost in a pilot plant scenario. No money for any exploration, no money to actually de-risk the underlying resource that was developed in 2012. And you can see it right on this chart. That light blue cumulative meters of drilling basically stopped when the board of directors changed over in 2012 to give a certain member a board seat at that point in time. And then no capital was given to the company to either de-risk or explore for some of the growth opportunities elsewhere on the project. That dark blue was the initial discovery at Las Conchitas, a couple of kilometers to the south over at San Albino. The actual discovery hole was put in 2011. It was a great hit. It was 2 meters at about 60 grams. The next time that hole was followed up on was after the management changes happened in 2019, when there actually was some capital that was given not only to de-risk the resource, build the mine, but also to start delineating and actually exploring around the Las Conchitas areas to find a second mining front so we can get to our targets of 1,000 tons a day by the very end of 2022. So that's why that dark blue started to pick up in 2019. Now that the mine is turned on, and now that we're going to be in a positive cash flow situation towards the end of this calendar month, everything changes, right? This has never been about a 500 ton per day operation. I mean, that's why we start every presentation with the 3 things that we're working on in northern Nicaragua. This has never been about a 500 ton per day mine. This has never been about San Albino. This has been about getting San Albino built and delivered in such a way such that the cash that we can get from San Albino can go and focus on the other 2 things that are frankly more important than San Albino itself. The ability to find additional resource to mine this at 1,000 tons a day at a reasonable scale, and then to prove that this really is an orogenic gold mining camp. So this is going to be the first time that we have a big boy exploration program over at the broader San Albino area. So there will be some drilling over at San Albino. There are some different pits that we have that do need to be drilled and de-risked, sub 10 meter spacing drilling to meet our specifications for stuff that will go into a mine plan. So some of that drilling is going to be for San Albino. A lot of that drilling is going to be for Las Conchitas, and for the first time ever to start looking at regional stuff, which is the light gray over here. And we have 23 kilometers of strike on our land package. We've already put out data last summer that has shown about 6.7 of that kilometers is a strike extension of the San Albino vein itself, with a multitude of showings that are grading well into the double digits. We're going to be putting out results, prospecting results very similar to what we did last summer at our new concession that we picked up in February of last year, La Segoviana, which will show additional very, let's leave it at that, very nice hits over there from prospecting results. That shows that this is a system that could potentially contain millions and millions of ounces itself. So San Albino, relatively small resource, 500 tons a day, relatively small plant, which has now been built. But that was really just the first stepping stone for us to turn on this cash machine that will allow us to go and finance the other objectives that we have of the company, to find near-term additional resources at the satellites around San Albino, as well as over at Las Conchitas, and then for regional work that we're going to really start in earnest towards this summer and the end of this year. So we've put out some drilling results on some of those satellites. A couple of weeks ago, we put out a few infill holes that actually were outside of the resource that was delineated over at the central pit. So what we're mining right now is the west pit, and the open pit showings of the west pit is the San Albino veins. So that's the San Albino vein, which is delivering well in excess of half-ounce fully diluted material that is now sitting in stockpile in front of the mill. What we put out a couple of weeks ago is associated with the central pit, which is on the Aras vein. So the Aras vein, we've been able to track a dip extension of that well in excess of 700 meters. Eventually, it's going to go underground. So there is a component of the underground resource that is right underneath the west pit. But what we put out a week or so ago was infill work from the open pit over at the central pit on the Aras vein, showing mid 20 grams, multi-meter intersections, very near surface that will be open pittable. And just kind of put your brain around this, because what we're doing right now over at San Albino is going to be the same thing that we're going to be doing over at the central pit starting early next year. So we'll have two separate deposits within the San Albino area that we're going to be mining simultaneously that will give us the feed to fill that 500 ton per day mine at a relative level of sustainability, knowing that by the end of 2022, we'll have a mineable resource over at Las Conchitas and bring that into the fold and start mining this at 1,000 tons a day with very limited infrastructure that needs to go in. Now, as the crow flies, this is where the deposits kind of lie. Las Conchitas effectively abuts San Albino. The area that we're focused on right now, we've actually further divided the Las Conchitas area from our geological team, just so they can focus on certain areas from the north, central, and south zones over at Las Conchitas. There's 9 targets amongst all of them right now that have drill holes with fantastic hits, multi-meter, multiples of 10-gram intersections amongst those on all of those 9 targets. The 3 most advanced targets are what we have on the south zone, which was the Mango, the Bayakun, and the Las Dolores zone. We're going to be putting out some results over at Las Dolores towards the end of this calendar month. And that's going to be the initial resource and then the initial feed for that 1,000 ton a day operation coming from the southern zone. Now, just like what happened in last year, we put out a relatively small resource. There were people in the marketplace that said, "Oh my God, your resource is so small." The same thing is going to happen over here. There are 9 targets over at Las Conchitas. We are focused on 3 of them. we're going to have a small resource that will initially focus on those 3 areas, knowing full well that this is going to be expanded, just like San Albino in and of itself will be expanded, like we're delivering with some of those infill results that we have over at ours. The most important thing for us when we put out resources is that we have the geological controls in place, the geometrical controls, which I'll go over in a second about what that actually means, in place, such that when we are actually mining this material, we know exactly what we anticipate pulling out. We do not like surprises. I don't even like positive surprises. I like to know what I am going to be doing for the next 1, 3, 12, 36 months going forward. I do not want to have a resource model, a geological model that delivers me stuff that I cannot plan around. Now, in doing that, just because of the nature of our deposit, the nature of our geology, it's such that it is going to be complicated to deliver that kind of information. We have relatively narrow veins. They pinch and they swell, they boudinage. Everything that makes it difficult to mine, and why people a year and a half ago would have a tough time developing an open pit approach to doing this. We've demonstrated that we can do it well, but it is complicated to actually deliver a resource that we view as credible in order to do that. So we tend to take our veins to within 10-meter spacings in order to get this there. And then we can actually use very sophisticated ways of modeling what that resource is for the long run. So what we experienced last year, we're going to have an updated resource on San Albino, which will include some of the other satellites over there. At the same time that we're going to have the initial Las Conchitas resource for 3 of the 9 targets that we've had the advanced drilling on now. And then additionally, towards the end of the summer, we're going to have for the first time ever, actual drill holes that are going to be put outside the direct area between San Albino and Las Conchitas. The entirety of this project, the only place where drill holes have ever been placed have been in San Albino and Las Conchitas. We haven't had a single drill hole that has been placed anywhere else on our property. And when we're going to be putting out, let's call it in about 2 or 3 weeks' time, some regional prospecting work over at La Segoviana, which shows that this, let's call it 5 square kilometer zone that we have between the San Albino deposits and the Las Conchitas area, we have potential going 20, 25 kilometers away from where we're mining right now. And frankly, the gold mineralization in the system goes off our property in either direction on government-controlled land. So let's start with the mills itself. Now, before anybody freaks out, in order for us to test our dry stack tailing storage facility, we needed to make sure that the press was able to press our filtered tailings down to a moisture level that was conducive to dry stack. So in order to do this, we bypassed all of the cyanization, all the nasty chemicals that go into those tailings itself, run it through the press, and we're stockpiling it on the grounds. So even though there are tailings on the ground on an uncovered basis, that has not seen any chemicals over there. So that's one of the things that we're going to be doing over the next couple of weeks, is that now that we actually have moisture levels that meet our levels of specification, we're down to sub 10% moisture. We'll have the ability to run those to run the material through our carbon and leach circuit with the application of cyanide and carbon recoveries. So getting the yeah, so it looks like the mills are turning right now. So we've got 2 500-ton per day mills. Apologies for the shaky camera work. So don't stare too close. You might get a little bit nauseous doing there. So we have 2 mills. We've named the left one Betty, which is right now on hold. It's a spare. There's a few things that need to be worked on for that before that gets up and running. And then we have Bertha, where at full capacity, that was going to be running 20 hours a day. That can handle 500 tons per day at the throughput that we're running it through. So everything that's going through the mills right now will be taken up into our Nelson concentrator that you see right above that. That is taking out some gravity extraction. So everything coming from those mills will go through gravity. And then this is one of the bottlenecks that frankly was starting to piss me off over the course of the last few weeks. But luckily we fixed that about 10 days ago. That gravity concentrate initially sometimes goes onto a shaking table. That was kind of our initial approach for some gravity recoveries, to take some of the very high grade material through, and then we put that through our induction furnace. Now, the middlings coming from that stream had enough iron and some penalty level material that became clear that the shaking table, while it's fine for some of the very high grade gold, the medium grade gold and certainly the low grade gold, it looks like somebody else is looking at the security camera right now as well. So we'll get somebody else's tour as well right now. It's clear that material needed to go through an intense cyanization circuit called an Acacia reactor over at our refinery in order for us to produce a saleable bar of gold, right? So otherwise, when we actually put the middlings from that gravity table through the induction furnace, it had a bar of gold that frankly would have had so many penalties over there, it wouldn't have been cost effective to sell a bar certainly of that size. So that Acacia reactor, that intense cyanization reactor, was initially turned on at the end of February, and it was giving us a lot of issues. So we had the contractor come in place at the beginning of March, and he was there for at least 3 weeks. And he basically said, look, you're just not getting enough fluid through the system. It's like, if you're going to be running at this level, it's just not going to be working. We were checking the piping, we're checking the fittings, checking everything that goes with this. And then literally after 10 days of this, we found the problem. It was just a faulty flow meter that cost all of about $20 that we found at a local store down in Ocotal about an hour drive down the road from the mine, replaced it, and everything was fine. So that one little part, which frankly, there was nothing even wrong with the Acacia circuit. It was just like this flow meter that was just giving us bad results, was actually holding up the ability for us to process our gravity concentrates into a saleable gold product. And finally, we got that fixed about 11 days ago, such that now we can actually have like real high quality doré bars. And then we now have enough of that that we'll have the first commercial shipment towards the end of this week. On top of that press that you saw over there, we needed to go through a lot of debottlenecking work just to make sure that we got the appropriate level of moisture levels over at those tails before they were going to be able to be safely stacked on our tailing storage facility that you see over at the right. This may be one of our executives that are now looking at the mine, but I'll show you just quickly kind of where we are on the mine and the tailing. So we'll take a step back over here. So that's our tailings storage facility over here. So once we get the moisture level down to the 10% level that we are right now, we'll have the ability to convey it over there. But in the interim, over the course of the last 3 weeks, every time that we had our mill functional, we would extract the gold through gravity, and then the rest of those that material would go through the circuit. But until we were comfortable actually taking that material at the appropriate moisture level, we were not going to be placing it on our storage facility. We were just stockpiling it, again, chemical-free, on the grounds next to it. But now everything's fine. We have our COO. He's now got his second shot, fully vaccinated. He's actually en route to Nicaragua. So over the course of the next couple of days, I think we're about ready to put a pin in the tailings press. Everything's good, and then we start everything up, and then we can actually have real carbon recoveries coming from our plant as well. So everything that you see over here has been running through the full plant. There has been cyanide that has been introduced into the system at the refinery level through the Acacia, but really for the first time, we're going to be putting the cyanide and the carbon through those carbon and leach tanks that you see to the left, such that you can have full extraction. It's a little bit too early to give any indications as to what the gravity recoveries are for our material, but at a minimum, this is pulling out 50% gravity recoveries through those Nelsons right now. So there's actually a substantial amount of gravity concentrates that we're storing in our safe right now, going through the Acacia reactor, and then building up enough inventory to eventually be able to sell that doré. And then you're getting a little bit of a nice zoomed in view of the mine over here. So I'll let whoever's working the camera be there. What you see on the right is some waste development over here, getting down to the Porcelana zone. That's about 3 benches below where we are right now. We've been mining on the left of this screen for the first 4 mining benches that you've seen extracted. And again, the fully diluted grade of those veins are well in excess of a ½ ounce material coming from the mine. I'll be putting out our mine to date reconciliation numbers, I say towards the middle of next week. And it's positively reconciling to the resource model, certainly from a grade perspective, just like we said it would. We're able to mine these very narrow veins in a very careful and diligent way, and doing it in a situation where I literally have no doubts that we're going to be able to ramp this up from a mining perspective at over 500 tons per day by the time that we get into the Porcelana zone sometime in the early summer. And frankly, that's okay to be 3 months out, because mining this at 300 tons per day, we have enough stockpile to be running through the process plant at 500 tons per day, really without interruption, just because we can utilize that stockpile, even though the mine will take some time to ramp up until we get into some of the thicker units from the San Albino vein towards, let's call it the end of June, early July. Lastly, in terms of updates, so we finally sold Mexico, so that's going to be off our balance sheet. So I have to speak to the accountants. We're going through our audit right now. I don't know if that's going to be flowing through our audited financials for Q4 and the year for last year. I would anticipate that it wouldn't, but at the very least for Q1, we closed that transaction at the end of Q1. We'll be able to report a very substantial gain and a humongous increase in non-cash working capital on our balance sheet as well. Mexico has became a distraction a long time ago, so it's actually very good to get that off our plate. So now our focus is exclusively on San Albino and doing our 3 main things over there. Obviously, getting through all the teething issues that that any mining company needs to get through. For us, everything that I'm seeing over here are very, very minor issues that frankly, most of them have already been resolved. And then in ramp up, such that by the end of this month, we'll be processing it at very near our nameplate capacity, and then with our exploration program going in earnest, with results coming out in fairly short order. So with that, I'll open up the door to any questions.
So I've got a few questions for you, Akiba. So first, can you talk about future capital needs and if you foresee requiring further debt or equity issuances?
Right. So we had a philosophical discussion with the board like a couple of weeks ago when we were having these frankly frustrating issues with the Acacia circuit, and they asked the same question: are you going to need more money? And I'm like, if we don't have the ability to sell gold, we're obviously going to need more money. There's a big operation that we're running over here. We actually have the ability to sell gold now. So even though I would say the shipments of gold, the mining is going great. So like we have a stockpile of gold that has a net realized value of probably pushing close to $20 million right now, sitting in front of the crusher and our ore stockpiles. But getting that gold into a saleable commercial form has been really a hair-pulling exercise over the course of the last month. And it looks like, at least from the gravity circuit, that has been resolved. So if that's true, and we're actually going to be running the Acacia unit without interruptions, we'll actually have the ability to process gold. The grades that are going through the mill right now, on an all-in basis, will be more than enough to be cash flow positive. So I don't anticipate anything. Obviously, if something happens with the ability to get that gold out into a saleable form, then obviously we've always run our balance sheet on a tight basis. This is probably the limit to how low I would want to get our cash balance to. It's a little bit different than what you see on the presentation. We have about a little less than $3 million collectively within the group right now. That will be sufficient so long as we can get the gold out and sold into the time frame that I'm anticipating. If there are hiccups, there are hiccups, but I don't anticipate any going forward.
And talking a little bit more about your cash and debt situation, when you start generating cash flow, what are the plans? Are you going to repay your debt facility or your working capital facility? Are you going to use it for exploration? How are you thinking about deploying capital?
Yeah, so on the exploration front, we've approved an $8.5 million program for the year. That will, I don't even think we're timing it from a balance sheet perspective. This is really more of a driller logistics perspective. Is that we now have 2 rigs on site. We're going to go up to 5 in early May. So the real step function of the spend hasn't really happened yet. And then we're on a payment cycle, so that it really wouldn't start until early June. So there's no real need to kind of slow things down or anything like that. Like our current plan is fine with respect to managing balance sheet and cash flow, and then that is going to be priority number 1. So priority number 1 is to finance that increased program from 2 to 5 rigs, and then with an additional 6 rig from an additional production blast hole. Did we just set off a blast over there? I wasn't even ready for one.
Maybe it was the super artisanals.
Yeah, I guess that's why somebody was like looking at the camera just to make sure that they actually had the view of the blast over here. So and actually, by the way, so in terms of so just lastly on that, so priority 1, doing the exploration program, and then literally everything beyond that, the priority is get that debt repaid as quickly as possible on both the Wexford and the Nabari side. So that will be the main use of cash proceeds for there. I don't think there's a single program exploration-wise that we deferred for capital needs. This program that we've come together is really the extent of what we could do with our on-site logistics, and that's personnel, geologists, and support. Even things from logging facilities, the ability to analyze and process the data. It's not like we can double our exploration. It's not like we can spend $15 million a year on exploration over here, based on the team support logistics and from what we have. That being said, the amount of targets that we have are such that this is low-hanging fruit. Everything is a sensible investment on the exploration side from what we're seeing right now.
Okay, and are you offering any guidance in terms of debt repayment?
With our expected recoveries, the grades coming through, we will likely generate in the 7 months of operations on an after-tax basis, probably something pushing close to $30 million, just to put it in perspective. So if we're allocating 8.5 to exploration from there, and figure corporate level G&A, which isn't all that much, you can probably get to numbers of what that means. A substantial portion of the debt is going to be repaid this calendar year.
Okay. And as much as I like watching the explosions, can I have you pull back up that slide that showed meters drilled over time, cumulative meters drilled? So I think that's a really relevant slide. When you talk about spending $8.5 million on exploration this year, can you give us a sense of what the budget in previous years was?
zero, right? So from the exploration side, like the only reason why you saw a little bump from 2015 to 2016 was that even taking a step back, because I'm not entirely sure how many people remember the history of Golden Rain, Marlin, and Sailfish, but Marlin created a royalty subsidiary called Sailfish, which is now a separate publicly traded company that put a grossly encumbering gold stream on this asset, which then got renegotiated to either a 3 or 2% royalty on the project itself. But part of that gold stream required our operating team to be the last word in approving any technical budgets, right? And this was probably wasn't so much the economics of the stream that was holding back the advancement of this project. It was just the other side really did not want to do the work to de-risk this project at the level of our satisfaction, which is kind of what you saw after Mako was created, and we actually had a seamless management intact. That jump from 2015 to 2016 was not exploration work. That was basic metallurgical and infill work that needed to be done. And then even after that increase, it was clear that this deposit was not drilled out to a level where you can actually build a credible mine plan around it. When we took over at the end of 2018, and then from a management perspective in the early part of 2019, we initially commissioned an 8,000 meter infill program that grew to nearly 30,000 meters just on the infill, just to get the resource to a level of satisfaction that we can basically say, you know what, this is what the mine is going to look like. This is how we can actually plan our bench by bench mine plan around it. But prior to this, the fact that the predecessor company was planning on going ahead with this mine with what they had, would have been an absolute disaster if it did. There was a lot of technical work that needed to be put into place in order for the understanding of the mine to be such that you can actually build a real mine with some modicum of predictability and planning associated with it. And it really wasn't until in 2019 when that infill program that got subsequently expanded was in place to get that type of information. And then that was the basis for that updated resource that actually has a model that bears resemblance to geological reality that we put out in 2020. And then that is what we're mining on right now. So in terms of exploration work, other than some very, very minor programs that happened in 2012 and 2013, there was virtually nothing that was done on this project in its entire history.
All right, thanks for that. I'm going to stay on the regional exploration. Maybe you can pull up a regional map and tell us what the plan is in a little more detail, where you're going to put the 5 rigs, where you'd like to explore. And I had a question on specifically La Segoviana, and if you can elaborate on what you think you may have found there. I know you haven't released it, so I'm not sure how much you can say.
Yeah, so you can see the colors. So you got the red concession, which is the San Albino Murra. And then you have San Albino and Las Conchitas, which is actually part of those concessions, but we have like the orange and blue around that. But that's one concession, which we have permits to drill wherever we want, right? So and that's what we're doing over at San Albino, and that's what we're doing over at Las Conchitas. In the summertime, we've already put out last summer that we've extended the strike potential of San Albino about 6.7 kilometers. And to put that in perspective, the entire resource on the San Albino vein had a 230 meter strike associated with it. So this is about almost 30x. It's kind of the area. It's not to say that there's like a 30 times bigger mine over there, but just to put it in perspective of the area that we've delineated, the extension of this vein, it really is about 30x in terms of what we're mining right now. To drill it, which will start this summer, we'll have to start on the red concession. So on the other side of Puerto Rios. Now we acquired Puerto Rios from another company called Condor Gold, who actually they used to own this asset prior to Golden Rain back in the mid 2000s. those drilling permits did not transfer over to us. So we had to redo those drilling permits. I actually think we're going to be getting them imminently. So I think our plan right now is to start drilling regionally to the northeast of Puerto Rios, probably in the July timeframe, thereabouts. We actually may have the ability to drill over at Puerto Rios around that same timeframe as well. But right now our plan is to start maybe a few kilometers away from San Albino on the other side of the green concession in areas that we have permits today to do it on. But it's the same stuff. Like there's no geological demarcation between those rivers, right? So everything is basically the same.
Okay, thank you. And I have a lot of questions, so I'm just trying to go through them, keep them thematic. In terms of exploration plans, so you're working towards a resource estimate, a maiden resource at Las Conchitas. Can you elaborate on plans there and when you can expect that to be released?
Right. So it will likely only be on those three advanced targets on the south part of Las Conchitas. So it's called the Mango Bayakun zone on this modified long section over here. So all the way on the right. So that's towards the south of Las Conchitas, just on the right of Candelaria Creek. So that's that little crevice that you see between those two purplyish circles over there. We haven't even started infilling at all there. So right now we have a drill over at a satellite of San Albino in the southwest pit in the Aris zone over at San Albino. That's one rig, and then the second rig that we have focused on the southern area, doing some spot checks to find out the extent of the southern area. Now, this is a type of deposit where a shareholder brought this up, and it's actually kind of an astute observation. I don't think this is the type of company where you can have a $1 billion drill hole, right? So there are some companies, it's rare in this industry, where you can basically put in I'm exaggerating a little bit, you can put in a drill hole and basically say, with that drill hole, I found 10 million ounces over there. You can come, obviously there's a lot of arm waving around that. There are types of deposits that are like that. Because of the geometry of what we have, these are shallow dipping veins. So that when you're like focused on the open pit over here, there's going to be a limit to how far that dip is going to go for you to extract it from an open pit. Underground is the same. Likewise, for you to get a really good handle on the geology over here, you do need to have to infill this quite substantially. And then also, you can kind of notice in this modified long section where a lot of these veins are associated with these hills, right? So, and there's a reason for that. So most of these are coming from thrust faults, low angle faults, shear zone hosted over here, and then you get folds, you get these boudinages over here, and then you get these localized faulting where on the entirety of our property, I don't think there's ever going to be a pit that's going to be more than 300,000 or 400,000 ounces. So this is going to be a series of pits over here where you're going to be focused on individual ones that need to be drilled very, very tightly for you to have some modicum of credibility associated with it. So I do believe that there are millions of ounces of gold on this deposit, but you're never going to have that one hole saying, I'm drilling over there, I've got my 10 million ounce deposit right in that zone over here based on the information that I get from one hole. So it's going to be a very similar situation to Las Conchitas. We have three zones all the way on the right on this modified long section, all the way on the bottom over here, where you're going to have a relatively small resource that actually holds together really, really nicely. You saw the results that we were putting out last year over at Bayakun. Every single hole that we hit was in excess of 20 grams at reasonable widths and reasonable, and certainly shallow, everything within 20, 30 meters from surface. And right now, we're trying to get the constraints around that, not in the broad geological sense, because the strike potential in these things can be measured in the kilometers, the dip potential in these things can be measured in the kilometers, but on a localized basis, there's going to be a limit to how big these things can get from a geometry perspective, just in terms of how the veins lie, how the localized faulting are going to be cutting things off. And that's kind of what we're going to get a handle on. And as investors, you really do have to make the decision about whether or not this is the right type of company for you to be invested in, knowing full well this will never have a large delineated resource just because of the constraints that we have from a geometry perspective, and then what we need to do in order to get a credible geological model out there, the amount of infill work that needs to happen. So it's a fundamentally different thing for me to say with arm waving, that I do believe that this is a multi-million ounce system. And there's enough information to support that. It is going to be damn near impossible to delineate a resource anywhere remotely that size just because of the constraints that we have geometrically and the amount of infill work that we need to do to get this out credibly.
Okay, I have 2 follow-up questions. First, when you talk about this big and orogenic gold camp and what you're describing with the potential for multiple pits, is there an analog that you can give us? Like, what is this region potentially comparable to?
We have a geologist on the board, Dr. Rael Lipson, used to be the head geologist for Goldfields Americas, and then he did some work on San Albino, kind of pitching his boss to do a JV on the asset, and he was summarily denied, actually for a lot of the same reasons that I was talking about earlier, in terms of kind of conventional miners wrapping their head around what we have over here. But he actually really liked the asset and wanted to have a board membership going back for many years right now, just because he was really interested in what's going on over at San Albino. In his mind, and I do think there are differences, in his mind, the closest analog in the world, and certainly there are attributes geometrically and geochemically, is the Oceania deposit in New Zealand called Macraes. Now, we have a lot of similar attributes to that in terms of how the deposit lies, kind of how the deposit was created. Very, very similar in terms of low angle faults that generate in those systems. The main difference is they don't have a 1.25 meter by 10 gram deposit. They have a 10 meter by less than a gram deposit. So it kind of like reverses those metrics. So while there are similarities geometrically, there are similarities in terms of being able to find these systems to repeat with a reasonable level of periodicity. It's obviously economically extremely different than what we have. Beyond that, there really isn't much out there where we can actually say, you know what, that actually bears a pretty substantial resemblance to what we have. This is kind of a unique thing that we have over here. Okay.
And my second question before I ask it, I foolishly booked you for an hour, Akiba. Are you okay? Are you okay to continue on for another 15 minutes?
Yeah, please.
Okay. So my second question is, so if you're not going to have a drill hole that really grabs the market attention in terms of adding size and ounces, one would ostensibly argue that once you prove out the orogenic gold system, that it's a camp, that's when you should start to see values. So how many of these potential pits do you think you have to define before the market agrees with your theory? Do you follow me?
Right. I don't know. Right. So you got to start with what exactly is the potential over here, right? So San Albino, just to give you a sense of geometry, is that you have about a 230 meter strike on the system. It's and that's both the San Albino vein, and then to the southeast, the Aras vein. Collectively, it's delineated about 230 meters, completely open along strike. Certainly in the regional sense, and even on the localized, sense over here. We put out some results from the southwest pit that hit 60 grams over a reasonably wide interval right at surface to the southwest over here on a completely different unit that would extend the strike another couple hundred meters from there. But just on the resource that we put out, just put these numbers into your mind: 230 meters of strike. The deepest that the pit is going is about 120 meters. You can kind of get your thumb protractor in the air and see that those veins have a dip of like mid 20 degrees. So you can take out your high school trigonometry books. That means that the dip of those veins is probably in the low 300s meters from an open pit potential. Now, these orogenic ore bodies can have dips that go on for miles and miles and miles. In fact, over at the Aras vein, from the open pit down to the underground, we've delineated 700 meters of dip potential, and it's completely open down dip from there as well. We anticipate San Albino being a very similar thing. So 230 meters by, let's call it 300 meters to take a number, times the average width of the vein, 1.25 meters thereabouts, at the 9.5 grams that we've delineated right now, gives you roughly, I mean, that was a back of the envelope calculation, but it frankly was about within 10% of what the delineated resource that we put out was. So the question that you have to ask as an investor is that, what do you need to actually have to justify this being a fruitful investment, right? So let's say the number, for argument's sake, is 1 million ounces, about 4 times what we have right now. So do we have the potential to have 4 times in any one of those units of geometry? Do we have the ability to have a kilometer of strike, ceteris paribus, everything else being the same? The answer is, we've already delineated 6.7 kilometers of strike on the other side of the river over here. We have 23 kilometers of what's rapidly becoming tested strike. Somebody asked over at Segoviana, yeah, we've actually prospected all the way at the tippy top of that purple on the top of your screen. We're going to be putting out about results over there, but it's going to show very similar stuff to what we found elsewhere on the property. So is there potential to increase your strike over here from 230 meters to over 1 kilometer? Of course there is. I mean, there's information to show you there right now on that front. Is there a possibility of increasing your dip potential? Of course. These orogenic systems, like I said, they have dip potentials that can be measured in the miles. So going from the 300 meters or so of what we've delineated in that MDA resource to 4 times the size over that, of course there's potential for there. Thicknesses, I think we're probably limited. I think it's going to be a narrow vein deposit, so I don't think you're going to get much over there. Grades, I would be ecstatic if the grades held up to the San Albino levels of 9.5. So I don't think you're going to get much there. But in terms of strike and dip, you betcha.
Given the geometric complexities of the deposit, does the cost of proving resources go higher as you go deeper?
Yeah, definitely. I get into these almost circular discussions about very similar to the last question. It's like, well, what is it gonna take for the market to give you credit over here?
That's where I'm headed next.
Right, exactly. So like, you get one argument as well. The market needs to see cash flow. It's like, great, we built a mine, and by the end of the month we'll show that. And then the other end is, well, the market needs to see a big resource over here. Those are two like diametrically opposed optimization systems over here, right? So in order for us to get cash flow, it's not like we were going to be building the mine on the basis of that 2018 information. There just was not enough drilling, interpretation, and frankly, discipline to put out a credible resource that reflected geological reality, as opposed to putting out a resource that was put together principally to give something that the management thought the market would like. we do not think that way. Like we start with reality. I can arm wave with the best of them. So we can take reality and then go like this around what this could be. But you got to start with reality. And there just wasn't the discipline to do that before. There is now. So yes, you need to start in that front. And then once you actually have like a reasonable size resource, you can then build a mine to get cash flow from there. But that is one optimization parameter. The other side is, what's the easiest way to bank additional resources or frankly even reserves here? And the answer to that is obviously new discoveries and new pits are helpful, but the easiest way to increase resource over here is to just do appropriate levels of infill down dip and for your underground resource over here. The reason why our resource was the 280,000 ounces that it was right now is because we just did not feel comfortable putting any category of resource in that underground with the level of drilling density that existed below 120 meters from surface. I don't want to say it's easy because it's going to be difficult and will require a lot of money, but I could easily get that resource, probably not to the 900,000 that I was before, because I think there was a lot of liberties that were taken with that 900,000 ounces, but certainly to get this up to a much higher number than what we have right now, simply by doing underground drilling over here. But if you notice kind of all of our drill programs, we put out like, we've probably done about 7,000 meters of drilling to date, and it's gonna ramp up in a step function. And when people think about 7,000 meters, it doesn't sound like that big of a program. But just going back to geometry over here, 7,000 meters when we're focused on the open pit, the average depth of our hole is like about 45 meters, maybe 50. So you're talking about 1,400, I'm sorry, 130, 140 holes just for the 5 months with 2 rigs going on right now. I'm involved in another company that has a narrow vein, involved as a director in this other company has a narrow vein orogenic ore body, but it's more or less subvertical in nature. So they've drilled like 50,000 meters with a similar number of holes that we've drilled. Just because it has nothing to do with efficiencies. It's just because their ore body is this, or ore body is this. So you can put a lot more holes because they're shallower. So there's a lot of information that you can get by doing it this way. To go underground, that's working against you. And unless you actually have an underground drilling platform over here, you're going to need to put in some deep holes, right? So it's going to require a lot more money, a lot more time, a lot more geologists to do it.
Those answers didn't just disappear, Akiba.
Right, you got the super artisanals actually stole everything.
I helped them. So staying on the theme that I know it's difficult to talk about, but I have a lot of questions on stock price, capital market strategy. How do you get out of this range that the stock's been trading in? And further to what you said about strategy, I mean, people can argue management strategy one way or the other, but your strategy is set and it's very clear, and you post your objectives in your presentation on your social media in every meeting. And for me, I'm a small cap investor, and over time, regardless of industry, if management hits their provided milestones, they gain credibility and the share price usually starts to work after that. So that's my 2 cents. I don't know how you want to tackle the question. I've got like 5 different angles. So maybe you can just talk a little bit about your strategy for trying to add value in the market beyond putting the mine into production and delivering exploration results. Like, I guess some of the questions are.
Yeah, so like there were a few moments in time for any investor to have a gut check about what they wanted to do over here, right? So there was the discovery, right? That was made, rediscovery. This wasn't mine in the 20s, but the rediscovery that was made in 2009, and then it caught a lot of excitement in the market from 2009 to 2012. There was a certain type of investor that is invested in discoveries to see how big that was. So perfectly rational for people to have made an investment, and this predates me in its entirety. So people could have made their investment decision over there. Then the next gut check really was in 2012, where it was clear that the board and management, probably deferring to the board, frankly, took the decision to not do anything on the exploration side for it's not even budgetary reasons. It was for I would call it personal reasons. That there was not a support to be putting in any dollars that didn't build a mine, even if there wasn't information to build the mine at that point in time. Those investors needed to make a decision at that point in time. Is that clearly, if you were investing this as an exploration story, there was not support for any exploration dollars. So it makes perfect sense. There's a lot of turnover over there. And again, this predates us. Then there was the original sin, which was taking that royalty stream from Sailfish. That royalty stream was taken from Sailfish because it was adhering to the objective of not spending any equity capital to advance this project. By doing that, there was another chance for investors to be in there about whether you wanted to go and advance this project to what that management and the board level was doing, or to get out because people were afraid of the stream. That was another time. So another transition of shareholder base at that point in time. I was on the other side of the equation, so I was not a fiduciary to Mako Golden Rain at the time. I was on the other side. So that's 2014. It was a 4-year process for us to evaluate a merger between Marlin and Golden Rain and the restructuring of that stream, which then led to the merger in 2018. That was another gut check for investors. Is that, did you invest in it because you believe that the Sailfish stream was the right form of capital to advance this project, which, as the creator of Sailfish, I can emphatically say it was not. Then, but if that's what you believe, that was your opportunity to leave the company at that point in time at the end of 2018. Then you had the management changes in 2019. So I came in as interim CEO without a lot of guidance in terms of strategy, of what we wanted to do at that point in time. A lot of confusion in the marketplace, like what exactly is going on here. We had the transition of management. It was abrupt. The other CEO quit. He was not terminated. To go and get a job elsewhere at a different mining company. But at that point in time, investors had a gut check. Do you want to invest in this with a lot of murky information at that point in time in March? Another transition from a shareholder base. And then it really wasn't until after the initial equity capital that went in to start doing the real work to build the mine. And then when I came in as full-time CEO with, at that point in time, the support of the board, which required me eliminating a couple of the board members of the previous board structure at that point in time, which is where I laid out the strategy. So all these times we had a transition of the types of investors that were invested in Golden Rain / Mako. Now, if there are shareholders that are still there because of any one of those previous 4 data points where they were agreeing with that strategy rather than the one that was starting to be delineated at the end of 2019, I don't know what to say. Is that there was plenty of perfectly rational decisions for investors to transition in and out of that time. But when we laid out the strategy in 2019, in the midst of a global pandemic, in the midst of getting hit by 2 very serious hurricanes that hit our project, we've actually delivered on literally everything that we've said, right? So there's clearly still some shareholders that are there, and inclusive of some old board members that still do need to be transitioned out. But for investors that were there for the old guard, thinking that somehow we're not articulating our strategy or executing our strategy, it's just that at this point in time, I really don't know what to say. There's plenty of very rational reasons for people to have sold in 2012, in 2014, in 2018, in 2019. At this point in time, I don't really have much to say.
One of the other questions was asking about analyst coverage and relationships with investment banks and sort of your institutional shareholding or institutional shareholders rather.
Yeah. So like in and around the time of the syndicated equity deal that we did in June of last year, which was the last equity raise that we completed, there was some expectations for sell side coverage on that, and frankly, so there were some valid reasons. So the one of the reasons why we had one of the investment banks lead the deal is because we actually really liked the analyst over there. That analyst happens to have transitioned to a different investment bank. So that was kind of one of the reasons why that's happened. But then coming this from an investor's perspective, so I used to be an investor in the junior gold market as well. So I do have some familiarity with it. You have to ask yourself as an investor, why do you actually need the sell side analysts over here? There is an element to this where you kind of need to have some sort of exposure for the generalist community. Like even when I was managing a portfolio over here, frankly, there's so many companies that one of the most important things for an analyst to do was to actually just remind me that a company existed, right? So that there's a component to that. But in terms of information, in terms of being able to show you on a step-by-step way how this company is unfolding, please, somebody name me one thing that an analyst can do that I have not done in public forums, right? So then it becomes a time where is your need and a desire for an analyst to be there, to be a third-party purveyor of information because you don't trust management, you don't believe what we're saying, you don't believe in our execution strategy, you don't believe what we're doing over here, which is fine. I would just advise you that this is the type of company where if you don't trust management who has the affiliation with the controlling shareholder, if you don't trust management and the controlling shareholder, you can't invest in a company like that. This is not a type of company where this deposit is great, but man, that management sucks. I just wish they would be replaced by someone better. It's not going to happen, right? So this is a controlling shareholder, and for better or worse, Wexford and myself have a longstanding relationship, and this is the management and the strategy that is being delineated on or being executed on, right? So there's a limit to what the sell side can provide an investor other than a hand-holding exercise. And this is not a type of company with its level of liquidity and exposure where it's conducive for hand-holding. If you're uncomfortable with the position for whatever reason, I don't know what to say, but it's not like there's going to be some sort of magic answer coming from the sell side that all of a sudden someone gives you a nice price target that it's going to change anything. It really isn't.
Well, I think the other argument that people have for sell side coverage is really exposure for the company through the institutional buy side. And I would argue, and I'm sure you would argue it too, that market is much smaller, particularly in metals and mining. And from the companies that we represent, that we work with, Mako always gets the most interest on webinars on a continuous basis, the most engagement on social media, honestly, the most interest, and it's coming mostly through retail, high net worth, family offices, a lot of US funds. It's not the traditional Canadian buy side, but I don't know, you can talk to that strategy, Akiba, whether you agree with me or not, but like I can look at I can look at any webinar list that we do, and Mako is always the easiest to market. It really is. It does get the most interest. So if it really is the sell side that's driving interest, I tend to disagree because
like my Twitter is intentional, right? So I've never been on social media before, never had a Facebook account, not on TikTok, right? Either. But Twitter was important for this very reason, is that it is clear that you need to have some level of exposure. And I found it initially I found it kind of humorous that that nobody heard of Mako in 2019, and this was in the time of a rights offering. And like, here's this company. I was a portfolio manager in this business. It was my job to at the very least have a very narrow view on the, let's call it the 1,500 publicly traded companies that are out there that have some sort of modicum of even residual liquidity over there. There would be a number of companies out there that, whether it's in North America or Australia, that at the very least had to have heard of and give you a one sentence description of what they did. The fact that our industry and the buy side in it didn't even know who Mako was in 2019 was astounding, like to me. It's because there's a lot of things going on the asset in terms of the grades that were coming out, frankly the uniqueness, the fact that it was sponsored by a private equity fund, the fact that this was done there was a rights offering that was being capitalized, where it was very clear that there was the ability to have a reasonable size liquidity position. But there was just a hesitancy to learn about something new that I found kind of funny. But I also didn't. That also served as another purpose. It certainly gave me a lot of comfort in terms of where this was going. I mean, we're starting from a position of zero in terms of visibility. So, in addition, for myself personally, and Wexford acquired a very substantive stake in the company at that point in time, and around that financing, you're basically starting from a standing start in terms of exposure. So it was a series of tests that we were doing. Is just on instead of putting out just news releases, which nobody read, I would put out news releases and then have like the three things that I wanted to talk about, and these funny tweets with some weird memes that are on the bottom of it. And lo and behold, you actually, I'm not even exaggerating about it, you get 10 times the number of people that will read what you want them to read by doing it that way. So we do have exposure on that front. I do think that there is this holy grail thing that everybody is kind of looking for, is like, how do you get that level of liquidity that will be interesting to the generalist community, because the specialist community hasn't had access to capital for a decade over here. The truth is that, like, even though Wexford had a small pocket, and by small it was like a couple $100 million at its peak, dealing with very illiquid junior gold mining companies. In the broader scenario for Wexford, an illiquid company, illiquid company, would be any stock that traded less than $25 million a day, right? That's not our industry. It's like there's maybe 5 names in our industry that we would consider to be liquid. This whole notion that somehow going from where we are right now to getting a boutique investment bank writing a research report that somehow we're going to actually have liquidity to be of interest to a real well-capitalized generalist investor it's a pipe dream. So you have to do things incrementally to expand your liquidity profile. One of them is the presence on social media. I've discussed this before. I got into a lot of controversy about doing like a reverse stock split. One of the things that we need to do is to be eligible for an index. So that's one of the things when we're ready to do it. It's like it's clear that the TSX is going to require us to be in production for at least 2 or 3 quarters before that they'll allow us to be in the index. Once that happens, yeah, we're going to try to do things to get involved in the index so we can have a piggyback on the liquidity of the GDXJ and the GDX, which is a reasonably liquid ETF. Those are the things that you have to do. It's not going to be a magical key that you unlock, because none of our industry is liquid. This is not going to be a stock that people can get in and out of in the context of a 10, 20, 30, 50, $100 million position, which is kind of what we would look to do for liquid names as a small generalist. Wexford was was a relatively small generalist. At its peak, it was managing $7.5 billion. That's a relatively small number for a generalist portfolio manager.
Are you still considering a stock consolidation then?
Yeah, in the context of uplisting to the TSX, which at the earliest, actually this calendar year looks unlikely. It'd be at the earliest would be early next year.
Okay, and then one last question, and I do apologize to everyone that there's a lot of questions that are going to go unanswered. Please feel free to email them to me and I'll get answers for you all. I just think running over 90 minutes is probably going to be painful for everyone. No offense, Akiba. But the last question, which is a question that comes up a lot, is your shareholdings, and also there's a comment that you've been purchasing shares of Sailfish. Do you want to touch on sort of what Mako is in terms of your personal net worth, Sailfish, and yeah, that's pretty much it. How aligned are you, Akiba?
So what do I have? I have like just under 12 million shares of Mako. I think I purchased outright, inclusive of stock that was purchased in conjunction with the Golden Rain Marlin merger. I think close to 9 of that was outright purchased. Have an additional 21 million options, which have incremental strikes as low as 16 and a quarter, as high as 35. On Sailfish, I think I own just under 1 million shares, and then I have another couple million options thereabouts. But strike price is not too far from where we're trading at right now. So I've been purchasing shares of Mako, purchased some shares over at Sailfish, because it's the same thing over here. It's like these are liquid stocks. I found it humorous over at Sailfish, where here's a situation where we were public about our strategy, right? So we told everybody we just sold this half of a royalty for US $9 million that I don't even think people knew that we owned. And then we don't really have any G&A over there, so there's now excess cash. We're anticipating spinning off a silver asset in the midst of a reasonably decent silver tape over there. And then we told everybody and their brother, sister, mother, aunt, and uncle that we were going to be buying as many shares back as we humanly could out there in the market. And do you know what happened to the stock after we announced all of that? Nothing. And I'm like, this is a stock that trades 20,000 shares a day. We have publicized that we are going to be finishing off what's now grown to over 3 million share buyback. We're going to be renewing that buyback in July for another 3+ million shares. We're going to be spinning off the silver asset over there. The stock's going to go up. So at this point, somebody decided, without calling us, right, just to put out incremental sales in the market, which I think grew to over 1 million shares. It says, all right, if you want to sell it, we'll mop up everything, inclusive my personal capital behind it, because I can tell you right now, supply and demand still exists in this world, and the demand is going to be a hell of a lot higher than what it is right now.
Okay, thank you. And I said that was the last question, but when I look at the questions, there was a number on a potential dividend policy. Can you touch on what your thoughts on potentially instituting a dividend down the road would be?
On Sailfish, right? So on...
Sorry, it's on Mako. Yeah,
so Mako, it's very clear is that we actually have, we're an operating company. So we have operating costs, right? So right now we're still kind of maybe 48 hours away from actually generating our first quote unquote revenue. So there's cash needs that we have right now, both to finish off the completion of the project, which won't be complete until we're in commercial production. The plant's obviously done, so the CapEx part is complete, but we do need to commercialize everything. Secondly, we've announced an $8.5 million exploration program over there that then has the second priority over there. And then there's the third priority over there where we need to do some regional exploration work. The fourth priority is to repay the debt as quickly as possible. And then after that, we can take a look at shareholder returns. And we'll look at that in the context of what Mako needs internally, externally, and whatever. Now, I was reading some commentary about that, about how we're putting shareholders fourth in that list. I guess we'd be putting shareholders fifth in that list, because fourth would be debt repayment, which is an absurd argument, right? So like we're basically telling people is that there are high return projects right now in a company that is capital constrained that we are going to be investing in as the cash comes out of the mine. If you're investing in a junior gold mining stock that has this level of opportunities to invest in, and you want a dividend, it's like at some point, yes, when we exhaust our capital needs because we're running out of high return investments, then of course, we don't keep war chests. Everything else will be for shareholder returns, buybacks or dividends. But it goes back to investors needing to have their hands held. This is a business. There are things to invest in the business. If I'm going to be investing in things that have a higher return than my cost of equity / debt, I'm going to be investing in it before I return those proceeds. Sailfish is in a completely different situation right now. It doesn't have any G&A. It's not an operating business. It's a royalty company. I don't take a cash salary. My partner is the CEO of Sailfish, doesn't take a cash salary. We have excess cash, and the prices that are out there for royalties are completely insensible to be acquiring. In fact, we've divested some assets over the course of the last year. That is a situation where share buybacks and dividends are on the table, because it's a completely opposite situation to what we have over at Mako. And we've always thought that way. And if investors are kind of upset about that, like I don't know what to say. That's how you run a business. And now you have to look at capital structure. It's not, dividends and buybacks are not about just giving cash back to shareholders. You have to look at it in the context of what alternatives are. And right now, it is clear that the alternatives for Mako specifically is to reinvest in what we have.
So for potential shareholders that are looking for exposure to San Albino and surrounding areas and are potentially looking for a distribution, would be much more rewarded in the way they want by buying Sailfish shares over Mako shares.
Sure, right. So like, and by the way, like all of this changes based on the cost of debt and equity capital. We have, if you add up all the bells and whistles on like the Wexford facility is that it's a separate situation because it's a controlling shareholder, and obviously Wexford likes their pound of flesh too. But leaving that aside, we actually took third-party capital, which I thought was an attractive facility, from Nebari. They've been great. I recommend everybody who's building a mine to take a look at Nebari. They're a new kid on the block with money to spend. That $6.4 million facility, even though it had a notional 8% coupon associated with it, with all the bells and whistles, because it came with about a $400,000 original issue discount, was about a 14% IRR, right? So that is my cost of debt capital to a third-party provider. So for me, and by the way, it's okay to actually have a debt facility that's expensive, because it was a 1-year facility that's going to get, or a 15-month facility that's going to be repaid in fairly short order, right? So it's okay to have an expensive facility if it's small and short. Like, you don't want an expensive facility that's long duration. Otherwise, you can wind up killing your company that way. This one is fine to take on. The equation about dividends changes if I was a barrack that could borrow at 3.5%, right? That my cost of debt changes, and therefore it makes more sense to pay a dividend than to repay debt. But I can tell you one thing that we will never do is that we will not be a check the box type company saying I heard from my friends at my investment club, or the functional equivalent on the buy side is that that dividends are like the new thing that everybody is focused on right now. Therefore, I should pay a dividend. We will never run this business that way. We will always run the business is, what are we looking at in terms of what we need to do to run this business effectively, safely, prudently, with all stakeholders involved, and then to make decisions based on returns, both in terms of what we reinvest in the project, what we distribute to shareholders, based on the facts on the ground. And we never feel compelled to kind of chase the next shiny thing that the buy side is demanding, that retail is demanding, that frankly even other corporates or technically oriented investors are demanding. This is our company. We want shareholders there for the ride. This is our strategy, 1, 2, 3, and it's really our job to execute on it, and really nothing more.
All right, let's leave it there. I have one comment from the audience, which I'm going to tell you, Akiba. So he says, glad to hear your strategy. Keep digging and crushing. I said, keep digging and crushing and exploring. Thanks for taking the time to do a very thorough deep dive on what's going on. Is there anything that we missed that you wanted to cover today, Akiba?
No, I mean, that's about it. I mean, this is obviously an important month. This is kind of like the transition. Like every plant is going to go through teething issues, and we were certainly not exempt from that. But as far as I can see, I think the last remaining cobwebs have now been exorcised from our plant. In which case, guess what, guys? We've got a mine in our hands, real gold mine.
Well, congratulations.
All right.
It's been quite a year. Anyway, thank you everyone for participating. As I mentioned earlier, if you had questions that didn't get answered, please email them to me and I'd be happy to get them answered for you, and have a great afternoon.